myself Vaibhav. In today's session, we are seeing the sell-off in the USD JPY, and it is in a larger trend is the continuation on the daily time frame. And now I think the level of 103 is likely to be broken on the lower side, and we might see in new year, that is the next month, the levels of even 102 being reached. So you can say that bears have taken back the control after the long consolidation phase, just in between the 103 and 104 level, and now we should be getting back and keep looking for the bearish trade in coming days. If we consider the trading context for the day, the equities are enjoying the bull run, and the today's session also looks likely we'll be a witness to the fresh highs being formed in the key equity indices for the United States. In yesterday's session, we saw slight correction, not much of a correction, just with negative close, but the underlying momentum is still bullish. And in today's session, as the markets are getting underway, we are seeing fresh buying momentum, and I think given the backdrop of many positive developments, the year is likely to close on all-time highs for the key equity indices in the United States. If we see the data docket, there were not many releases for the Asian economies and even for the European countries. The data docket was almost empty. Moving on to the North American trading session, we got the advanced good trade balance data for the month of November. And here the US is witnessing the highest ever trade deficit since the data keeping began in 1955, and now for the month of November, the trade deficit stands at US dollar 84.82 billion, which is a lot higher compared to the prior reading of US dollar 80.4 billion. And this is happening because the US economy is picking pace, and the demands for goods is going high, and that is resulting in the higher growth rate for imports. But at the same time, the exports have not really been that are not showing that much growth, and that has resulted in the widening of the trade deficit in the last month of November. Now moving on to the technical front, we will cover the USD JPY first, and then we will see the year-end outlook for the Dow Jones Industrial Average. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and here the 103 level is going to be crucial. And looking at today's fall, which began close to the 103.5, I think this is going to be the fresh breakout on the lower side for the USD JPY, and that will set the tone for coming weeks. And we might see this break on the lower side, and it is going to be crucial for the trading participants as well, and we will be in position with a good probability of making money on the bearish side. Even in yesterday's session, we had talked about the possibility of USD JPY finally breaking on the bearish side, and that's what we are witnessing in today's session. And now all we need to do is keep looking for the optimum levels to go short in the USD JPY, and I think it will be better for us to trade with the trend and not try to go for buy trades since it is already on the low levels. It looks like that it is in oversold territory, but still after this consolidation for the last couple of days, this is the fresh momentum, and we should let it subside before we decide to look for the contra trend opportunities. So looking at the lower time frame chart, I think we will have to keep in mind this first support level, and if we see the convincing close below it in today's session, then next session onwards we can even look for the shorting opportunities closer to it. If we were to use the prior swing high as our stop loss level, then that proves too far away. Now that's almost 80 pips away from the current valuation, so that is going to be a fairly wide stop loss. Rather than that, I think it will be better for us to keep an eye on shorter time horizon and then try to optimize the entry and exits after this deep decline which has already taken place. Maybe if we see some consolidation closer to these current levels and then some retracement, and after that we can think about going in for the fresh short position. But right now the stop loss is pretty wide, and if we were to look for fresh opportunities, then I think we will have to rely more on lower time frame charts where we might indeed get some optimum exit points in case we happen to be wrong. So if we want to target the fresh entries, I think we can keep looking for the fresh shorting opportunities as long as the USD JPY is trading below this confluence of 50, 100 and 200 SMAs which are there around 103.5 levels. All these three key SMAs are converging closer to this level, and I am expecting this price zone to act as the near-term resistance for the USD JPY. And unless and until we see any fresh breakout on the higher side beyond these key SMAs, I'm not really expecting the momentum to shift gears. And in such a scenario, it will be better for us to look for shorting opportunities. Even in today's session, we can try to look for this entry, but given the fact that tomorrow and the day after that is the holiday time, we are not really likely to see much sharp moves in today's session, and it might be better for us to wait it out till Monday when every one of us will be fresh and it will be the start of new year. And maybe after that we will also find new opportunities to go for fresh trading opportunities. But even in that scenario, we have to keep looking for optimum trading opportunities. And even when we come back for trading on Monday, I think this SMA zone is going to be of crucial importance, and anything below it will be indicative of the bearishness in the USD JPY. And then if we were to short it, maybe a stop loss just little above it, anywhere closer to 103.65 to 103.70 should do the job. If we are fortunate enough to get the entry anywhere around 103.4, that is the price area, not exactly, not precisely, but near around that, maybe 5 or 10 pips plus or minus, we can keep that as a buffer zone. And then on the lower side, as I said, I'm expecting this fall to even extend towards 102 in coming sessions. So that will open up a great opportunity for the swing traders who like to keep their positions open for at least a couple of days. Now, moving on to the equity front, let's see what's happening in the Dow Jones Industrial Average. The Dow Jones has been making the higher highs for quite a while now. Even in yesterday's session, we saw a new all-time high being made above 30,500. After that fresh high was made, we saw a little correction after Mr. McConnell, the how Senate leader of the Republican Party, blocked the additional stimulus measures. After that, we saw some correction, but that is not a key concern at the moment, and I am expecting, given the bullish momentum which has been prevalent in the Dow Jones Industrial Average, the equity index is likely to hold on to its recent gains, and after consolidating closer to the current levels, it might even try to go on the higher side. And in that scenario, it will be better for us to go long instead of looking for some profit booking. And here, looking at these lower time frame chart, we have the fresh break above the prior swing highs. Here, the Dow Jones Industrial Average price action was capped on the higher side, closer to the 30,300. And then in last session, in yesterday's session, we saw this breakout where the new swing highs were made. Of course, after that, we saw this deceleration, and again the equity index came back closer to the prior levels, but it has been successfully holding on to these prior swing highs, and as long as it is holding above it, the possibility is fairly strong that it might start to climb back on the higher side. And in such a scenario, it is going to be prudent for us to go for the long positions only. Even if you consider its pivot point series and the regression curve, both are pointing to the continuation of the bullish trajectory, and I feel that's what we should also keep in mind, and try to look for buy trades. And if we want to go for the buy trade, of course we have to optimize the entry and exit, and for that we can use these SMA formation, where we have these all three key SMAs pointing to the upward momentum, and on the lower side I am expecting this 200 SMA to act as the crucial marker for us. And as long as the price action is well above it or holding on to it, we can go with the long trades. And if we look at the prior price action, then this was the price zone which was capping the gains for the Dow Jones Industrial Average before we saw this breakout. And now I am expecting the same price zone to act as the support. And in such a scenario, it will be good choice for us to keep our stop losses sharp. Anything below this, the Monday's low, which is there around 100, sorry, 30,000 and 100, should be good enough for any buy opportunity, and any break below that will be indicative of the deepening of correction in the shorter time horizon. So that's it from my side for today's session, and I think given the holiday session, we should not really look for long, or you can say big swing trades, and instead of that, the scalping opportunities are likely to prove more beneficial. And once we come back for trading on Monday, then maybe for starting from next week, we can go for the big trades also. So that's it from my side, and if any of you have any query or any idea to share, you can give me the feedback in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous holiday weekend. See you in New Year. Goodbye.